Hi, my name is Pete Hahn, and thank you for watching this tutorial video. Be sure to visit www.hahn-tech.com for the full library of video tutorials. I hope this video increases your knowledge and helps you become more efficient with this topic, whether for home or work. Please support this channel by sharing these videos with your friends and colleagues.
Hi guys, welcome to the video. Boy, some exciting stuff here this week. This is the first video I've been able to publish on market technicals for the year 2020. And let me tell you, I've been trying to get to this for the last couple of months, but I've been so busy with custom projects and updating the Q&A forum and responding to special requests of all sorts that I haven't been able to get to the videos. And so today seems like a really good time to get to these videos because we have hit a correction low for the major U.S. indexes. We're going to be reviewing the major U.S. indexes as we do in each of the videos of this series. Before we get started, let's go ahead and cover the disclaimer, which is I am not a professional trader. I do not trade stocks for a living. What I do for a living is I serve the trading community by developing custom tools that are requested by various traders, both professional and retail. So I just want to make sure that I disclaim anything that I show you here in the video is not meant to be an advertisement or a recommendation to buy or sell any financial instrument. Trading involves risk, and that risk means that you may lose all or more than the money you have deposited in your broker's account. Yes, you can lose more. You can be in debt to your broker, and that's something that cannot be fixed through a bankruptcy. So keep that in mind when you're trading and be very careful. And again, I'm not here to show you how to trade or how to make money trading. I'm here to show you how to look at the charts from a technical perspective. We're doing a technical analysis, looking at technical levels. For instance, correction levels are 10%. So 10% or more from recent highs is considered a correction. Anything below 20% is considered bear market. They're not levels that I made up. Those are the levels that have been in place for many, many years. Okay, so what we're looking at here is my dashboard, and we've got the three major U.S. index futures on the top. Of course, I've got the VIX over here on the far left there. Sometimes I'll go ahead and change that, and I'll look at volume spread. And then sometimes I'll take a look at that, and oh my goodness, that is really something. And then sometimes I'll take a look at trend, which gives us a level of buying or selling pressure when it gets up over 2.0. We know that selling pressure has nearly exhausted. You notice yesterday we closed above 2.0, which typically leads to a bounce the following day. And if we don't bounce the following day, the probabilities are for lower prices. It's not a pretty day if you're long indexes and hoping to spend that money anytime soon. If you have a long-term horizon, let me just say the strong hands, the smart money, those are the people that are buying today, and they're buying partial positions. At the 10% correction level, you can see that we hit big time round number 26,000 on the Dow futures right here on this chart. And you can see that when we hit that level, strong buying came in. Now these are strong hands. These are the people that kept their powder dry and reserved cash for buying when the market corrects, as the market does frequently. And we'll be able to look at previous corrections when we review the major indexes, and I'll show you the indicator that I've built that helps us to understand where we are in the market correction and where we can expect to be. Let's see. Oh, one of the other things that someone told me about, I read an article and they mentioned that folks were moving to the Swiss franc because of fears of the outbreak of the virus. And so I also sometimes will bring up the Swiss franc just to see, what is the general level of fear. It's a safe haven. In other words, people will go and buy that, kind of like bonds here in the U.S. They'll buy the Swiss franc as a safe haven. You can see yesterday that gold spiked up to 1,600. I think earlier in the week it was up to 1,700 an ounce. And so the fear on gold, a lot of times people will use gold as a fear index. So right now gold is really not showing a tremendous amount of fear. If you really want to see the fear, you want to look at the VIX. And sometimes in the aftermarket hours, see the VIX symbol, that's only for market hours, regular session hours. And if you want to look at VIX overnight, when the futures are trading overnight, then you want to look at the futures on VIX, okay, which is /VX. And you can see how those levels compare to the VIX index, okay? So anything up a 36 level, 36 is typically a bottom. I actually set a note to my friend, my trading buddy Larry. I said, boy, when we get to 36, I'm going to close out that put that I bought. Now, we'll talk about that put that I bought later on in the video. I still hold that put, but I haven't closed it out yet because I feel that we're still due for maybe another few percent down, maybe 15% before we have any kind of a major rally or recovery. Now keep in mind, folks, this is not just a normal correction. This is a Black Swan event. So think back to 2008, and we'll look at that on the chart to see how that market correction turned into a bear market. It's going to be very important that we understand how the market behaves so that we can keep our powder dry and make the right choices. Again, I want to emphasize this is a black swan, okay? This is not due to any poor economic conditions or a rise in interest rates. This is something unexpected that nobody was able to anticipate, and those who reacted quickly are being rewarded handedly. Those who were not paying attention and didn't understand the gravity of this virus as it began to grow in China, those people are hurting pretty bad right now, and you can expect that as prices begin to recover, they're going to be selling to try to get out. That's what creates these waves in the market. You can see here buying pressure here. That was the overnight session. Selling as it got to break even, just barely got to break even, a little bit positive. That gray line right there, that's the break even line. Okay, yesterday's close. And then the selling resumed as soon as the markets opened. Okay, and then we had this big rally here, and then again selling. Okay, so this is the opposite of what we've been experiencing for the past decade or more, in which every dip has been bought. In other words, everyone buys the dips because the trend has been up. So in a Black Swan event, you have to consider that if we really are going into a bear market, in other words, if we eventually get below 20%, then the balance will shift. Instead of buying the dips, people will begin to sell the rallies. So keep that in mind. It's very important information here. Very important that you understand how all this works. And that's why we're doing the video on market technicals, so we can understand where are the technical levels and where can we expect price to react. Okay, let's go ahead and review the major indexes and get into some details to understand how these corrections play out. Okay, so let's go ahead and go to the charts where I have my market technicals indicator set up, and you can see these levels here. I'll go ahead and start at the left-hand side of the chart so you can understand. This is back in February of last year where we had a market correction. It went down to the 10%. You can see the different levels here, 10, 12, 14, 16. It didn't go much beyond the 12% correction level. And we made new highs here in September, followed by another market correction. And that correction initially held at the 10%. You see that strong buying? All right, that's equivalent to what's happening today. Okay, if you look at the far right-hand side of the chart, you'll see we're down about 12% at today's lows. Okay, so then the other thing you want to consider are these Fibonacci levels. The magenta and the cyan, all right, so basically the pink and the light blue lines here, that's what we call the ambush zone. So any rallies that come up from the lows are going to meet this ambush zone here, and there's going to be resistance there. There's going to be selling there. Remember, I told you about the people that got caught holding the bag here when it dipped, and now they want out. They've changed their mind, okay? They were frightened to death from this 20% correction, and so they sold as soon as they got here. That's what creates these little, if we could zoom in on that here a little bit, you can see how the market react. Here's the ambush zone, and here's what happened. As soon as prices tried to get up into there, there was rejection, and then we got up into here, and then rejection again, rejection again. You see how over and over this level is called the ambush zone, and that's a lot of selling pressure. We finally got above that, and then we were able to get back to near record highs, okay? So let's go ahead and reset that chart so you can see how everything looks from a broad view. The other thing we want to look at are these Fibonacci extension levels, okay? We've got a 1236, a 1382, 161.8. There's also a 200% extension level up here. Notice that when we made new highs coming from the previous correction, we had pauses here at these, especially this level here, the 123.6 Fibonacci extension. Okay, that's a very important level we want to consider anytime the market starts to make new highs and recovers from a correction. But right now we want to focus on the actual nuts and bolts of the correction, and so we can go ahead and zoom in on the chart here and see that the lows were right there, right down, right at the 12% level. And you can see we opened down more than 10%, and all of today's action has been within 10 to 12% of that correction. Okay. And you can see we've already got our plots here for the ambush zone, the 50% and the 61.8 and the 78.6. Those levels will be key when we start to recover and go back to new all-time highs. But what I expect, because this is a black swan and people are still trying to digest exactly how this virus is going to impact consumer behavior. I mean, corporations are already canceling conferences and things like that, and there's travel restrictions. All of this is going to impact the economy, and it's going to impact earnings. And so we can probably, what I'm expecting is we're going to be looking at, 16, 18, 20%. We'll just have to wait and see how it goes. But here you have the levels here. Go ahead and snapshot this so that you can write these levels down. We're going to review each of the indexes. And now I'm looking at the cash index for the Dow. You see that $ DJI? That's the cash index for the Dow. Now we're going to look at the other indexes real quickly here. We'll look at the NASDAQ. Okay, NASDAQ came down 12%. Okay. A little bit more than 12%, probably call that 13%. All right. Then let's go ahead and look at the S&P 500. S&P 500 has come down almost exactly 12%. So again, it's just like the Dow. The S&P is very much like the Dow in this respect here, between 10 and 12% correction. And then the Russell 2000. Now the Russell 2000, as you've seen in previous videos, that has failed to make new all-time highs as the other major indexes have. And you can see from my indicator, this line, this blue line that comes down and starts to track the highs here, that's when the 52-week high has reset. So now this becomes the 52-week high on the Russell 2000. It's not an all-time high, it's a 52-week high. But what we do is we measure these correction levels from the 52-week high. So here's our 52-week high on the Russell 2000. And you can see that it dipped down about 13% from its 52-week high. Then what I wanted to do is show you the put that I bought. Now I've got a put, it's a 290 put. We're going to look up SPY here on this chart. We're going to bring SPY up here. And so I bought a put, it's a 290 put. So it's right down here. And what I did is, what happened, let me explain this. I was reading some conspiracy, I call them conspiracy nut jobs. Please don't be offended if you are, it's an affectionate term that I use for them. But they oftentimes prove to be right. And so I do spend a little bit of time reading conspiracy websites just to get the feel for what's going on. And so I understand when they're blowing smoke and when they're really serious. And so I read an article that was talking about oil tankers off the coast of China piling up because they can't be offloaded because nobody's working, everything's shut down, and they're not using that much oil because everything's been shut down. And the other thing that was very alarming to me is reports of shipping containers full of frozen food, frozen meat, that were piling up on the docks, and they were running out of places to plug them in to keep the refrigeration going. So this is something that I found out about, and I can tell you exactly when I found out about it because I bought the put. Let's go ahead and go to the monitor page. I've closed up to conceal most of my other positions here just so I can show you the put that I bought. Okay, so it's a June expiry, 290, and my thought was, well, this will all play out in, April, first couple of weeks of April when they have earnings, and this was my reasoning. And I was thinking that'll give us plenty of time to see if the virus is going to make any major impact. I had no idea that within days this put was going to start making profits. But if you look here, view trades, and you can see here that I bought that on February 19th, 2020, okay? And I paid $2 for it. I only bought one. I wish I bought two. But I didn't have a whole lot of money in the market, so I only wanted to make a small, it was insurance. I wasn't trying to make money with this. I was trying to shield myself from the decline that was going to come from the stocks that I want to continue holding. So have you seen the previous videos in this series? I've got a lot of stocks that are high yield stocks, 10%, and I'm collecting dividends, and I want to continue to hold those indefinitely. But if they fall below my adjusted price, that is my purchase price minus dividends minus covered calls that I've sold, then I fire them. As employees, I fire them. I just get rid of them. And so I've had to liquidate a few this week. I'm just glad that I had this put here to hold on to some of that gain that I had achieved over the last several months. So you can see it's up now about $930. Total $360 today. So I just wanted to show you then and share with you my reasoning on how I got into that put, and it was just reading some conspiracy websites. It's really tough to get all the facts. You know, the truth is the most valuable thing on this planet, and you can bet that everything will be done to try to obfuscate and hide and conceal that truth. Whatever that truth is in whatever domain that you're dealing with, consider that the real truth of the matter, the real truth is a valuable commodity, and it's difficult to acquire because of that, okay? Because people will try to hide the truth because they can gain from it if they hide it, okay? It's nothing ominous or conspiracy or tyrannical about this. This is just the way the world works, okay? So enough of that. I'll get off my soapbox. Let's talk about corrections. Let's go back to the Dow Jones Industrials. Let's put some time on this chart. I'll go ahead and collapse this left-hand side menu here. And then let's go ahead and change this over to a weekly. I've got a weekly chart over here. We can double click that so we can get a better view. And then we're going to put a little bit more time on this chart. Notice I've got 3 years here. We're going to go back 15 years and see if we can capture, yes, that's exactly what I wanted to look at. Now I've covered this in previous videos, but you see this section that I'm highlighting here? This was the former market, you might want to call it a crash, but it was a bear market. Bear market is 20% below previous 52-week highs, okay? So you can see how prices got to the 10% and bounced, and then they came back down, got to the 18% and bounced. You can see that they tried to hold that 20% level, and then you can see the ambush zone here. Remember I told you about that, the 50% and the 61.8% Fibonacci retracements, okay? Very key levels to keep in mind here. And then those were rejected soundly. We never made it back above those levels. And then once we got down below the 20% level, it just, look at this, the bottom just fell, it just collapsed, okay? So take a snapshot of this. Look at this very carefully and study it, because if this current Black Swan does the similar thing to the market, okay, you're going to know where these levels are so that you can understand what is the health of the market. What is the current health of the market? Right now, we're down 12%. No problem at all. No reason to panic whatsoever. Everything's fine as far as the markets go. We get down below 20%, that's when it hits the fan, okay? So wanted to show you that. And the other thing I wanted to show you is I've added more to this indicator, and I still have more plans. This market correction indicator, not only does it plot the Fibonacci levels and give you the retracement levels and the extension levels, plus the correction levels, but now I'm also starting to put in some labels here that give us some statistics that we can say, okay, in the 15 years, we've had 7 corrections. The maximum correction has been a whopping 54.4%. Guess what? It was this one, okay? Average correction has been 21% if you account for this mega bear market right here, okay? So if we go ahead and we change that time frame and we take that off by going to 10 years instead of 15, then we can see that the average correction amount has been 16.4, okay? And the maximum correction has been 19.4, and a total of 5 corrections in the past 10 years. All right, so you understand now there's no reason to panic, okay? I'm not a fear monger here. I'm here to help you understand how to look at these things in a sober-minded way, you know, without panic, without freaking out, and understand, okay, if we're within the 10 to 18% range of a correction, it's fine. It's healthy, okay? As long as your investment horizons are long-term, then this is the time to be buying, right? I mean, this is when the big money, the strong hands, are looking to buy. Does that mean you're going to immediately bounce and make new highs and collect all that profit? No. Sometimes it will break below the 20%, as we saw in 2008, 2009, and it will continue. So be prepared. Arm yourself with this information and hopefully learn from it to make better choices. Okay, there's one other thing I wanted to bring up here. Let me change the charts back to something that I use for tracking my swing trades. And let's go ahead and open this side view again, and let's see if we can look at the major indexes in regards to long-term support levels, okay? And we can see here the 200 daily. This chart on the right is the daily. The chart on the left is a weekly. I've got key moving averages here. It's an 8 period and 21 period exponential, and it's a 50 period and a 200 period simple. Okay, those are my moving averages. Nothing special about those. There's nothing secret about them. Everybody uses them. So what you can see here is that the 200-day moving average tried to hold as support in a non-life-threatening emergency. Let's say if it wasn't a black swan, that 200-period simple moving average on the daily would have held like a rock, and we would have been back up here around 28,000, okay? But this again is a black swan. So you look at really strong levels of support that almost always work. Well, when they begin to fail, that is your indication it's a black swan, not just a normal market correction. You can see these pink levels here that I've got. These are based on a monthly, so on a weekly chart, this is the maximum you would expect for a given month, okay? This level right here, okay? That's 26,280, okay, to be exact. And you can look back at the chart and see places where the market has hit those levels before. You can see that we crashed right through that level. End of 2018, we crashed right through that monthly support level. So there's nothing magical about those. They work in most cases, but when they don't, that's when you need to open your eyes, because when they don't, that means something else is going on. And ordinarily those levels should hold. But you can just see, I'll just let you take a snapshot of this, and you can review those levels later on at your leisure so you can understand how important those levels are. So what we're looking for is we want this market to hold here. If it's going to be healthy, we want it to hold here and recover. And we got a new month coming up. So we're at the end of February. March is going to generate a brand new set of levels here. We're going to be down here around 24,500 or so, maybe lower with our monthly support levels. So keep that in mind. And likewise, the resistance levels on the other side are going to be ratcheted down as well. So that's going to introduce selling pressure. Let's go ahead and look at the NASDAQ under the same microscope. Okay, you can see the NASDAQ has not even come close to its monthly expected maximum range. Let's see, S&P. Look at this, though. The S&P, the weekly 50-period moving average. That is very, very crucial, okay? You can look back in history, put one on your chart, and go ahead and look at the indexes. Look at that 50-period moving average on a daily and a weekly. But you can also see the monthly maximum range. It's held pretty strongly here for the S&P. So overall, S&P and NASDAQ really looking pretty healthy here. The Dow is a little bit in trouble. Let's look at the Russell. Russell, it's a long way from its major support down here, the weekly 200-period moving average. Okay, that's expected to be a rock solid wall of any type, but during a black swan, again, these levels don't always hold. Look, I'll give you an example here. This 200-period moving average on the daily. Okay, you can see that we closed the day right at that level, tried to get it back above it, and then collapsed right through it. So this is what happens during the black swan. People panic and they sell because they have to, not because they want to. They sell because they have to. And that means that they don't respect any of these key levels of support and resistance. So the technicals in many cases will break down, but that in and of itself is very telling. You understand the technicals are there to tell us what's happening during a normal, healthy market cycle. When the levels don't hold, when what we expect to happen doesn't happen, that's when we need to open our eyes and really pay attention, okay? So let's see. That's about all I had for you guys. I hate to leave on this note, kind of a negative, but the video is very timely. And you can see we're here at the last 30 minutes of the market session, and it looked like we were going to go back to making a positive, turn the day green from red to green, but we didn't. And now here we are retesting these lows. And I'll tell you, there's another market technical that I can give you a little hint on market technicals. You see this long candle and this doji right here? That low is almost always retested. Anytime you see panic selling or panic buying, and you see one of these long wicks right here, you see a rally like this, don't get excited and don't count your eggs before they're hatched, or count your eggs before they're laid, or count your chickens before they're hatched. How does that go? You got the point, right? So anyhow, see what happened is I was looking at this and I was thinking, oh, darn it, I should have sold that put. I should have locked in that profit, but I was patient and it was hard. It was really hard. I had to go out for a walk and get my mind away from the charts just so I could let this play out. And sure enough, here we are into the last 30 minutes of the market, and we're going to be retesting these lows. And oh my goodness, if we close below 26,000 on the Dow today, technically speaking, that is very unhealthy for the market. So hopefully that helps you understand where we're at. I know it's really, really hard, especially when these Black Swan events come along. Change everything. Everything is going to change now. Just think about the economic impact. Even though the death rate is very small from what we're being told, it's a very low death rate, it's still, those are lives. Those are real lives. And people, and I've been praying for them, and I've been praying for the people that are helping to treat those victims of the coronavirus. And just think about it. Think about all the first responders, the police, the paramedics, the fire departments. Think about all these people that are out there. They're in the public view. Think about all the volunteers at all these charitable organizations. They're there feeding people and meeting people's needs, and they need prayer. And I don't normally talk about my faith in these videos, but this seems like a very timely topic. I just ask you all to consider this in your prayer time, to pray for all those people that are being impacted by this virus and the people that are working to serve in a public venue where they're potentially exposed. And I just hope that they stay safe and don't infect their families or infect themselves. I'll leave you with that. I think that's a positive note. We leave on a positive note there. Guys, I really appreciate you sticking around to the end of this video. Thank you very much, and looking forward to completing that indicator. I have more plans for that indicator, by the way. I still want to add strategies to it so we can backtest what it's like to buy at a correction low and sell at a Fibonacci extension as we make new highs. I want to do a watch list so you can see how different stocks are behaving. It does work for stocks as well as market indexes. Let's see, the other thing I wanted to add, scans. I want to be able to scan for things like this too. So guys, that's all I've got for now. Thanks a lot for watching. Take care, everyone.
Thank you for watching this tutorial video. Be sure to visit www.hahn-tech.com for the full library of tutorials. I hope this video increases your knowledge and helps you become more efficient with this topic, whether for home or work. Please support this channel by sharing these videos with your friends and colleagues. Thanks, and take care.